It doesn't matter to me. Lovely. Don't knock on your own. Over there, there's. Oh, okay, that's fine.
Thinking ahead. I like that.
So he's a planner.
You go ahead, because I'm scared to sit down.
Hot. Yeah. All right, are we ready? All right. Good evening, everybody. So I'm going to talk like I'm talking to a whole bunch of people, and there's a decent crowd in here, but we also are streaming, like I told you guys. So if you want to check that out, go to Spread the Positive on Facebook, J Harmon Home Team, or Cedar Glade. It's on all three of those simultaneously. So if you'd like to share that, that would be awesome. Also, if you're here and you haven't checked in with Michelle, Michelle, stand up. Sorry, I couldn't resist. Anyway, so she should make a fat or a bald joke, and it would be just as funny back at me. But anyway, do sign in with her. So we've got a great panel tonight. This is the second time that we've had a panel discussion. So earlier this year we did 2022 in review. I called it one thing, and Michelle said I couldn't put that on Facebook. So it was what the heck happened, and it was a great panel. If you guys were here for that or got to catch any of that, it was awesome. But what we're doing now is we're going to do real estate investing 101, and then hey Michelle, is it in June or July that we do 201? July 3rd. We're going to do 201. We won't have the same guys back. We have a different panel, but
We already got cut.
I planned to cut you before you started. That's right. So
We're done before we start.
yeah, you got to schedule the intro. Yeah, but anyway, so I'm gonna introduce these guys. All three of these are friends in different ways, friends in different capacities and different time frames. Brian is the king of being uncomfortable. That is making you uncomfortable. So anyway, so we'll start with Jason. So I've got Jason Surrat down here with First Bank, and Jason and I have known each other for a while through Rotary Club, and also just he helps some of our J Harmon Home Team investors with some of their purchases. So Jason, give us a minute or so about you.
Sure. Hey guys, Jason Surrat with First Bank. I'm Senior Vice President here in Murfreesboro and am over the commercial lending team. So I handle more the commercial side of transactions. Individual investors also kind of fall into that. Basically anything that's not a first mortgage for your residence, the 30-year kind of financing, first mortgage. I can do home equities, car loans, everything else. So that's the easiest way to say it is what I don't do, and that's the first mortgage. But been with the bank for 7 years, been in banking for 24. Commercial banking, I love it. I love seeing people looking forward at their investments, what they want to do, how they want to do it, and how they get there. And one thing I'll tell you that I'm not a commissioned employee like some mortgage lenders, probably are. Commercial banking, we're W-2'd. So if you've got questions, let me know. My thing is I just want to make sure people are as informed as they can be.
Awesome. Next is Tab Talbott of Center Point. Thank you. Center Point Group. I always get the group and the legal mixed up. Center Point Group law firm. Tab and I got to know each other through a title company that he worked at for a very long time. And I found Tab to be very competent and very thoughtful. And when he didn't know an answer, he didn't make stuff up, which is awesome.
That you know of.
That I'm aware of. If he did, he was very good at it. Yeah, he was very, very good at it.
Fact check.
But he was always good at saying, I think it's probably this, but let me check. And then he had a infinite resource of people that he could go back to that were smarter than any of us and get the right answer. And I always felt confident that the answers you gave me eventually were the right answers. So, Tab.
Even if you didn't like it. Hey, so I'm Tab. I'm a local attorney in town. I guess the reason I'm here, I told Jonathan, I said I do not feel qualified to be up here, but I do have a lot of background with real estate law, and my current practice now is estate and business planning. So I deal a lot with folks that are buying and selling investment properties. And so I can speak a little bit on the legal side of things, tax side of things that you might want to know or that you might want to think about, and be happy to share any knowledge I have on that. I also do have some personal investment property myself, nothing too fancy, but it helps to have actually done a few things that you preach about as well.
And one of the things that we're going to talk about on the 101 side, as opposed to the 201 side, which we might get into that a little bit more, but as you acquire properties, as you build wealth through real estate, you have to make sure that you protect yourselves and protect the growth of those investments. And if it's the intention is to hand a portfolio down to the next generation, how do you do that intelligently? And that starts with planning all the way at the beginning. So the next guy, the final guy on our panel is Mr. Brian Derryberry. And Brian and I have had numerous lengthy conversations where I basically ask him, now you do what? And he says, well, you see, and then he says, is that something that you could help me with? And I say, probably not. And he says, okay. So it's not like it's illegal. Yeah. No, it only feels like it sometimes. That's all. No, I'm just kidding. But Brian does some different kinds of real estate investing aside from just the buy and hold or the flips. He does some flips too, but does some other stuff in addition to that I thought that kind of rounds out our panel and some very interesting ways that he makes money in real estate. So,
hey, I'm Brian Derryberry. I feel like I let Jonathan down now. I made my intro a little different because I don't have anything really cool to say. Like, I don't know why I'm up here either, honestly. So I'm Brian Derryberry, been married for over 20 years to Cindy, and we have some newly engaged people right here on the front row. Tell them congrats. Okay, good enough. There you are. Anyway, and have a daughter and a son. Daughter's going to college here in the next year, so we'll have a collection box at the back door. And I have a son who is 14, going to be turned 15. But that's not what you're here for. So I have been doing real estate. I bought my first house when I was 19 through a tax auction. And as my attorney friend over here to my right will tell you, that is the worst way to get into real estate.
Well, title companies don't
Right. Correct. So don't do it that way. That's for a 201 class. So after that, in 2001, I started my business, and I buy houses typically in a subject to. I take over the mortgage, then I turn around and either owner finance or I rehab. So, I mean, that's kind of all there is. It's that easy.
Yeah, that easy. So we'll get into some of that. So the way this is going to work, I'm going to ask them some questions. It'll be up to them, kind of free form. whoever wants to take the answer, one person does, people do, whatever. And I've got about 9 questions here. And then at the end of that, we'll open the floor if you guys have some questions. So if you've got some pens and paper or whatever, if you don't, we can get you some. If there's something specific that they say that sparks a question, I'm okay just going ahead and interrupting it.
Sure.
Or if you want to hold it to the end, that's fine too. All right, you guys ready? Okay. Scoot over. Trent says I'm out of frame. That's on purpose. Okay, here we go. So let's start with this. Brian, you were mentioning some other ways, some other avenues for real estate investing. The ones when people think about investing in real estate typically is just either being a landlord or flipping houses. There are lots and lots and lots of different ways to make money in real estate besides that, or being an agent. So what are some of the other avenues that exist besides just being a landlord or flipping houses?
Well, I have done everything from, of course, rentals to we've also done lease options. We've done sandwich leases. We've done some commercial where we've bought a mobile home and you break the homes off and keep the land for bank reasons. And then we would owner finance the homes out. I also do a couple a year. I don't brag about it, but I sometimes will wholesale just because the good pops of cash up front are really helpful because real estate is cash intensive. As the banker is nodding. So I will do some rehabs as well, but my specialty is creative finance. So what I like to do is get a hold of something that most people don't want to touch, don't know how to touch, don't know what to do with it, and create a deal out of it, be it owner financing or taking over a mortgage, sub 2. And then I typically try to owner finance it out, which is creating a note. And when you create a note, you can sell the note, you can keep the note, you can sell part of the note. So there are literally hundreds of ways to make money in real estate, without a doubt.
Okay. You guys?
So I've dealt I have a few clients that do what Brian does. And so I've got to learn a little bit about that. This is Brian's territory like I said, my personal experience, we have long-term, just plain old, good old-fashioned long-term renters. The problem I'm having right now is when we were buying those properties in 18, 19, 20, 21, the numbers made a lot of sense. They don't make sense right now. So I'm struggling.
Let me interrupt. So when you say they don't make sense right now, you're saying that the price versus the rent does not make sense. Is that what you're saying?
Yeah. So if you've ever heard the 1% rule, that's a unicorn that doesn't exist anymore right now. You could still find that back then. And so I've gotten a little spoiled, and I'm trying to adjust to that new reality of what am I comfortable leveraging the bank's assets on versus what I want to bring. Do I want to bring that much cash to keep my payments low, or am I better off putting that money in just the stock market? So so that's just my personal opinion. I've never done short-term rental, which is rentals as well. I think those are interesting. I have my issues with that, which we can maybe talk about later too. Certainly if you were flipping anything in the last 5 years, you looked like a genius. But that market's probably going to change too. So I think you've got to look creatively. You've got to look for opportunities. You got to look for stuff that's not listed, right? If you're in a mode right now of finding something where the numbers work, that's the only advice I could give.
Awesome. So, you said something that sparked. You mentioned a 1% rule. Let's talk about that real quick. So pretend this is 101, right? Pretend that we're complete laymen. when you said the 1% rule, what does that mean?
Well, only what I've been taught, which was there used to be this thing where you could buy a house for $150,000. Can you believe that? And you could rent it for around $1,500 a month. Okay. 1%, right? Of 100. So your 1 month rent is equal to 1% of what you paid. If you do the numbers on that, those are very good numbers from an ROI and whatever you like to go by, especially if you're going to Jason for your handout. It made a lot of sense, especially when interest rates were at 3 to 4% on investment properties, right? So that worked, and like I said, you get spoiled on that. And now, if you could find 0.5% now, right? It seems to be the going rate. So that has been a struggle for me, trying to wrap my head around, what does this next phase in my investing look like? If the 1% rule doesn't come back, how do I want to make that work for me? And I'm learning here too. So I'm hoping I can get something out of that.
The 1%, what you're referring to is a cap rate, is what that amounts to. So it's essentially a capitalization of the income that you produce off of that, right? So 1%, like you said, is a 10% cap rate. And what we're seeing a lot now, anything that's on the MLS, especially, you're going to be fortunate to find 6.5, probably percent cap rate. So to your point, like a 0.5% rule as opposed to a 1% rule. And there's some problems using cap rates, but they also they do a great job of illustrating the answer to the next question, at least for me. And that is, why would you invest in real estate as opposed to just putting money in the stock market? So, I mean, obviously stock market's tried and true. It's a thing here in the US, right? Like, we do that. That's where we have our 401ks. That's where we have mutual funds, Roth IRAs, whatever. Why would you choose to sink chunks of cash into real estate as opposed to the stock market, or maybe even in addition to the stock market?
Yeah, I'll take that. I think part of it is just it's tangible. You can touch it instead of getting a monthly statement. I think the other thing is while the stock market is tried and true, it's a lot more volatile. Now, this last year has been a really odd year, as everybody knows, just in looking at rates and what the Fed has done to try and, right, wrong, or indifferent, deal with recessionary issues, inflationary issues, all of that. Real estate is the long play, right? Unless you're flipping or doing a more creative type. If you're going with renter option, it can be the long play. You're not going to get that quick rate of return like you can maybe in the stock market, but again, that's a maybe. The mix of short-term rentals and long-term rentals is what I'm seeing more of our investors doing. So investors that used to have single-family rentals, annual leases, or maybe month-to-month, whatever, are adding in a little bit of that short-term rental. So the Airbnb, those kinds of properties, Gatlinburg, think Gulf Shores, those kinds of, pick up one of those for every 5 long-term rentals they have or something like that. It's not the consistency, but it also gives the spike that you need in revenues where, if you rent it for 2 weekends out of the month, that's making the same as 5 long-term rentals are. Sort of diversifying your portfolio a little bit.
Okay, I'll go. So I'll be the contrarian, so don't hate me here. But the way I look at it is this. So roughly what's the price of Apple stock today? All right, cool. Let's say 150. I'm glad you didn't, because I've done the numbers at 150. So let's say it's 150 and you are going to buy 1,000 shares. What is that? Yes, 150,000. So if you're going to buy it today, it's $150,000, right? So if I'm going to buy a house today, I pay I'm skipping ahead, sorry. But I pay 70% of the value less repairs. So 70% of 150 is 105. So I'm buying it at a discount. Now, I say all that to go, if you can buy Apple stock for 105 today, and it's worth, I think, 160 something actually, but I'm there with you. I'll do that all day. But I will say with real estate, I have more personally. I know this goes against everything everybody ever taught you, but I have more control of it because there's no stock split with what I'm doing. There's no buyback. I don't have any dividend, but I buy at a discounted rate. So even if tomorrow there's a house in Tullahoma that is, let's say the market goes down and it's 130, do you think you could sell it tomorrow? Done. So, right. Well, I probably would just make a phone call, nothing personal. And, right. No, I mean, but I still use him, by the way. I'm not saying not to, but, that's why I prefer real estate. And when it comes to the exit strategy on real estate, I can sell it. I can go straight to the market. I can do a rental with it. And at that point, the numbers make sense. Or I can owner finance it. And that way I have a note. And if I need money, I can sell part of the note. I can keep the note. So to me, I prefer real estate. Now, I do have a little money in the stock market. It's just because I haven't pulled it out. My wife used to work for somebody. So, but that's just me.
Yeah. So what I would add to that is, I guess I'm more, just a conservative approach guy. I've had this conversation with people in their 20s. Okay. How should I get into investing? My first thing is, if you have an employer that's going to match on a 401k, you should do that because that's free money. I also think a Roth is great because it's all tax-free on the income. Okay. So what I tell people is I would start there. If I was just trying to get into investing, I would start there. But as soon as you get past that point, I would immediately start looking at real estate. Why? Well, the 401k, the Roth, guess what? I have to get old before I can touch those. That kind of sucks. I don't like that. Historically, we know what the stock market's going to do. So we have faith that it'll continue to do that, but it's not going to be anything what we've seen the last few years. I mean, that's weird, just like real estate has gone, right? So, but on average, we should just plan on, 5 to 8%, something like that. What I also like about real estate is we get our tax deductions on those, which we haven't got into deep, but essentially you're getting one of the most favorable tax rates that you can possibly get on income when it comes to real estate. So I like that about it. There's also ways to avoid paying capital gains on real estate. They're called 1031. Now we have opportunity zones. And so we can still get that tax advantage. There's also a thing called Tennessee Community Property Trust. We can talk about that a little bit. That also gets us a step up basis. So, so real estate, to me, once I'm hitting my bases on free money. So that's what I say free money. I'm saying that matching, not paying taxes on the Roth. Then, and by the way, a Roth can also be used to purchase real estate. So, yeah. So
That's 201.
But again, what I love about real estate is I'm a little bit in Brian's camp in that, yes, it's not as liquid as, say, all my money in the stocks, but I'm really not investing in the stocks beyond what I just mentioned because I don't like giving up control. I want to be able to, if in my 50s, if I need to have some income because I want to pull back a little bit, to me, real estate's how I'm going to get there.
And I'm going to push back on whether or not it's liquid because a real estate investment actually can be quite liquid, depending on how you want to approach it. I mean, you can get a HELOC open pretty fast and tap into that money. Not the best way to do it, probably financially speaking, right? You're going to pay pay yourself interest, but that's sort of like borrowing against a 401k. It's kind of a similar concept. The other thing is, if you see something on the horizon, I can sell a house pretty darn fast. I mean, you're going to put it at a discount. I'm going to call Brian and say, hey, man, this one's for sale, on sale. And he's going to be like, yeah, okay. And because you just have to discount it enough. That's all. So it can be pretty liquid. And, there's some axioms, there's some rules that we'll talk about, like you don't make money until you sell it. You don't lose money till you sell it, all those kind of rules. And we'll get into some of that. But it's interesting, the perception sometimes, because we do tend to think about things in terms of how we would treat our personal residence, right?
Sure.
And these are tangible assets. That's what we're talking about. Buying and selling is tangible assets. It's not different. Well, I guess it is different, because even if you buy gold, you don't necessarily have a bar of gold always. You own that sometime anyway. So, all right. So next question. And you participate in this a whole lot. You have a couple of rentals. You buy and sell stuff all the time. I have a couple of rentals as well. How do you identify and then further, what is your definition of a quote good property, right? Like, what's a property that is good for you?
I think that really is on the buyer, to be honest. And I
You as a buyer, what makes a good property?
Well, I look at cash flow, for the property, the 1%, 0.5%, 1/4%, wherever it ends up. I mean, you don't want. I'll tell you, my wife is the most conservative person you will have ever met. Her fear, whenever I mention rental real estate, is what if we don't have a tenant, right? She automatically goes to that side. And it's true. There could be a time where that happens. But the other 36 months that you've had them as a tenant were fine. So it's a risk reward. I think it really comes down to risk reward. What are you willing to risk to get the reward of that property? We have a mutual client, Jonathan and I, whose investment or retirement, he at about 51, he started his retirement plan was not the stock market, was not 401k. He owns his own business. He wanted to buy one property a year for 10 years and then turn right around and sell one property a year for 10 years. So there's some tax implication, obviously, in that. But in his mind, that was going to be safer for him than going through the stock market and his wife's 401k investment. And so he's been a good client, right? Because he's in the acquisition mode. But it's done really well for him. Now, he started 6 years ago. So this was the first year that it was a really odd year. And you're not finding those $150,000, $200,000, $250,000 good investments that are going to give you that return.
What's a good property?
Spreadsheet. I mean, I'll give you an example. First house I bought, hemmed and hawed over it, spent hours, worrying about it, trying to make the numbers work. Sent an inspector out, did all that. We bought it, prayed it would work out. The last two I bought, I didn't even look at them, and I say that to say, once you kind of get into it and you kind of know what to expect, it's just a numbers game to me. I don't care. I don't want any emotional attachment to it. It is a commodity, just like Jonathan said earlier. Dude. And I have a property manager, so I could care even less. Which, if you're like me, my property manager, I pay, I think, 8% or something like that a month. And it is the best money I could ever spend, because I don't have to deal with anything. And so
it's one more layer of separation for you.
Absolutely. It's that, but it's also just, it's rebuttal to, I don't want to get the call at 3:00 in the morning about the toilet. You don't.
Yeah.
You pay somebody to do it. You work the numbers in when you're doing your you know, you work that, it's a cost. It's a real cost, but it's a cost I'm happy to pay. And so, yeah, spreadsheet. That's my answer.
And there's me. Worked better when it was off, didn't it? So I've done it long enough that I look at two things. I'm probably skipping around all over on this, but I look at if you can buy equity, you're typically pretty safe. Because if I buy with enough spread in it, I have multiple exits. Now, to this day, I mean, I've done this for a while. To this day, every time I go to close, I still get that little nervous, oh, geez, is this right? Did I screw this up? Oh, no. And I think that's good because it keeps me making sure I'm looking at my numbers all the way to close and make sure that, you know, I'm not a spreadsheet guy, but I do have my checklist. And that way I go over that checklist and make sure, you know, so to me, I buy in either terms or an equity. And I have to make it fit one of those two blocks. And if I run out of reasons not to say yes, it's a good deal.
What is buy in terms?
Oh boy. So let's say this is a 201. Okay. So if I'm taking over a house subject to, and what that means is so you have two different parts of a deed and a mortgage, right? We have two different pieces. The mortgage will stay in place and I will take over the deed. So the deed gets deeded to my company and the mortgage stays in place. So let's say I can buy a $200,000 house for 185. You know, no one else will touch that. Nobody. But the mortgage is in place at 3%. So I'll turn around and take that. Usually that house is pretty new. So I'll take that house, probably not do any work to it, sell it at the 215 mark, take 20, 25 down. That comes off the 215, and I'm going to amortize the balance on a 30-year note at about 6%. Depending on the area, what the rents might be, I might go a little higher. So that's terms. It's not a great equity purchase, which goes against everything I just told you. Sorry, this is why Jonathan and I are like, this won't work. But that's a good terms purchase. If I'm doing equity, it's just that spread, 70% of value.
So on the subject to, so you're charging you're keeping the mortgage in place with someone like Jason or Brian or whatever, and you're paying that mortgage, but you're making money. If their rate is 3%, you're making it.
It's an arbitrage.
Okay. So then when you do that, does that person still have that mortgage on them if they don't live at the house anymore?
Correct.
Okay. How do you convince somebody to do that?
So, okay, it all comes down to the people. So you deal with 90% of the market, period. Like most everybody will go to him to sell a house. I deal with 10%. I deal with a small group of people that need to sell this week, need to sell in 10 days, or have a specific time crunch, or specifically money or something is pushing them. So I deal with a different group of people. So I'm basically looking for motivation. The house is just numbers.
Yeah.
I mean, it's just numbers. Try telling that to your wife, when you're like, hey, we're gonna get rid of our house. She's like, no. But anyway, it's just numbers to me. So in short, there are a lot of people that need to sell due to divorce, death, relocation, loss of a job, behind on mortgage payments, all types of reasons. Those people call me. Everybody else calls you.
So those folks would not be able to purchase another house though.
Well, then it comes down to, here we go again. So it depends, and this is Mr. Banker over there can tell you more. But if I can show that they have a long enough payment, like I've paid on it for so long, depending on who the mortgage company is, they will either say, hey, it will count as 70%, I think is the last one we got to credit their DTI, debt to income ratio. I believe that's the closest one we've done lately, where if the payment was $1,000, they got $700 credit basically to go against that 1,000. It's only 300 counted against their income. And that's if it's seasoned out long enough.
All right. We just come back in July for the rest of that conversation.
I was trying not to do that.
No, it was good. It was good. So for me, I look at four things basically if I'm evaluating property. And I'm a little bit different than even what you were talking about. I like proximity because I manage my own properties, and I want to be able to be at that property within 20 to 30 minutes if something goes wrong. In fact, the ones that I'm managing now, they're all within sight distance of each other. So there's 6 doors that I can see. I can stand at one of them and see all the rest of them. And that's very appealing to me. Yeah, I like it because I can park and I can work on all 4 of them at one time, and it's great. The other thing that I look at, and this kind of goes back a little bit to what you were saying, can I rent it quick and can I sell it quick? I always want to know what my exit strategy is, right? Is it some weird something? I can get a great deal on it, but it's got a, 25,000 million megawatt electric tower in the backyard. I can't sell that quick. I know that's going to be bad. That's what I call Brian.
But I would, because Brian said it, I like what he said. If your equity is so good, even if it's a problematic property, right?
Yeah, I get that.
The pressure's off of I got to get this for it if you're in a really good equity position to begin with.
And that's true. If it's a $250,000 house in this market and I can get it for $100K, I want a huge spread if it's got a death nail in it. You know what I mean? If it's next to the dump, I need I don't need 70%. I need like 30 at that point. Because when the market shifts, and it always does, it always is, at some point, you're not going to get multiple offers on everything. At some point, you're not going to get everybody offering above asking. We're living through that right now. And so I've got to make sure that, so some properties at some point in some markets, they just plain don't sell, period. It doesn't matter what the price is. We lived through that in 2009. Brian and I have reminisced on how we should have collectively spent about $3 million in Lake Forest and bought the whole daggum neighborhood. Yes. And then the last thing is, does it cash flow, right? I mean, ultimately it comes down to that. Am I going to make money on it on a monthly basis and on an annual basis? So that's mine.
What's funny about that, Jonathan, though, is 4 of us answered, and there were basically 3 different answers. You had cash flow, you had a spreadsheet, your spreadsheet with expenses, you had exit strategy. I mean, really, it's kind of like you said, it's sort of all of them.
Yeah,
it really is.
for sure. All right. So next thing, so we've touched on this a little bit, but let's talk about valuation, making offers, that kind of thing. How do you approach that when you're about to make an offer on a property? How do you approach the valuation question, and how do you decide what to offer? And then of course, what your top number is, because there's always going to be a counter when you come in low, right? So how do you do that? How do you figure out what that number is going to be?
I'd say you guys, I'm more on the backside of that.
Yeah, I don't, you two could speak on this better than I could. I mean,
Well, I'll just tell you, I'm on the backside. So, I mean, I don't have rental properties. So for me, I'm seeing what my clients are bringing to me. So most of the time that's a signed contract. So they've already gone through it. Yeah. Now I can tell you what I've heard is everybody wants to buy low, sell high, right? So if you're the buyer, you're buying low. If you're the seller, you want to sell high. That's where those counter offers come in. It's got to be realistic or they're just going to laugh it off, and 2 years ago, it was a stack of offers that were coming in. So you were one of 10 or 15 coming in for this property. So how do you make it stand out? And so that's some of the things where I don't think it's always just the price, but it's maybe what are some other options that you have when you're looking at that?
the only thing I would say, I've used, my property manager is also a realtor, and he is also an investor. This is what he does for a living. And I would encourage anybody that's thinking about getting into this, if you're going to use a realtor that has actually done investing. It's almost asinine not to, because I rely on him greatly on his opinion on how to approach a negotiation. And I just can't imagine working with somebody that's not actually been through it. So that's the only advice I would give you is if you're going to go in represented, make sure you're using somebody that knows how to do it. We got a wholesale deal once because he got the feeling that the wholesaler was going to fall through. So I didn't see this. This was his spidey sense telling him this, right? We made a backup offer to the seller. Hey, if this happens to fall through, will you take it? Sure. Guess what? It fell through. There's no freaking way I would have known to have done that, right? But that's the experience of having somebody that's been through it. So that'd be my tip.
Along those same lines, I actually have a handful of wholesalers I deal with, and I've seen that hundreds of times. I've seen those deals fall through, and I've been on the phone talking to plenty of people, and they say, hey, I've got it under contract. And the thing I always leave them with is, hey, okay, no problem. If they come back and they want to renegotiate on something or something looks like it's going to fall through, give me a call. I get a ton of those, and I'm not going to be, my deal structure is going to be very different than what they just had. But at this point, they're wanting to sell. Back to the question, though, what do I look for? I look for, of course, the 70% of value if it's something I'm looking to take to straight to the market. If not, I am also looking at good underlying mortgage, something I can make money on. Hopefully, I'm making a good spread on the monthly. And again, mine aren't rentals, so I'm a lot more hands-off. These are mortgages. Like, if your toilet gets clogged, and I've had this call, the toilet gets clogged, and they're like, hey, what do I do? And I was like, well, would you call Bank of America and tell them your toilet's clogged? And they're like, no. And I said, well, hi, I'm Bank of Brian. And I don't mean that rude. It's just like, that's why I own or finance. I have had plenty of rentals, plenty of them. And will I own more? Probably. But as of tonight, I'm saying no. But don't ask me next week, because if the right deal comes up, I'll take it. I'll do it. If it's a rental, if it's a quad or something, or it has multi-doors, I'll jump at it. That's not a problem.
Can one of you just real quick, I'm going to ask the questions that some folks might not be willing to. Can you give me like a 1 minute, what is a wholesale? What is a wholesale deal? What does that mean?
Wholesale is this easy. You have a buyer or a seller who needs to sell. The house is worth $100,000. You get it under contract at $50,000. You have someone else who wants to buy, and they're willing to buy it at $60,000. You sit in the middle, take the $10,000, and they take the contract and close the property.
So the seller still gets 50.
Mm-hmm. Seller still
get
gets
10.
theirs. I get 10.
Other person gets the house.
Correct. And not all title companies want to deal with those as much, because there have been some real uneducated wholesalers. I mean, just this is what gives real estate investing a dirty name, is people hop into it and aren't educated. And so there have been a lot, and a lot of title companies change the way they will and won't take on those deals anymore.
So in that scenario, the person in the middle, the 50,000 here, 60,000 here, never actually own the property.
No. And correct me if this is the wrong terms, but if you have a contract on the property, you have an equitable interest, and you're just selling that interest in the property. So that's it. You're just selling the right to own it.
Awesome.
Close enough?
Yeah.
You ever thought about getting into law, Brian?
No way.
Yeah. Okay. Next thing, for those of you that do deal with tenants, and I know Tab's answer on this, so I guess I'm going to be the other answer on this one. How do you go about screening tenants? How do you go about choosing a tenant? Advertising, like the nuts and bolts of
You pay someone else to do it.
I knew what his answer was going to be. All right. And you've got experience. How did you do it?
So a lot of mine I had a whole bunch in Lake Forest, and I had a lot of people that were moving from like Antioch and just kept moving south. And I was a lot more hands-on. This is before I got smart and got a property manager, which I do suggest you get, because it is that buffer and it gives you a little less headache, a little less bother. You don't have to. I see a lot of neat nods, but I actually drove by some of the previous, like the renters, the soon-to-be renters properties, because you can learn a whole bunch by somebody's grass. You know, that car that's on blocks in a $300,000 house, that car is going to your house, and those blocks are too. So I would actually drive by the house just to take a look. Now we're in a different market, and a lot of people are coming in from out of state. So
A lot of vacations you can write off.
yes, I don't just buy in Tennessee. I buy where there's a beach too. So, but yeah, I always screened the snot out of people too.
So I use a site called rentingauthority.com. It's been fantastic. It's very inexpensive, but I don't pay for it anyway. I have a membership on there. I think I do pay for that. It's like, I don't even know. It's super cheap. But then every application is done by the applicant, like by the person or it's paid by the applicant rather.
Oh yeah.
So it's, I don't know.
Banks do that too.
Yeah, it's like $65 or something that they got to pay. And when they do that, what I have found is if I've got 40 people that are interested in my property, and I say, hey, it's a $65 application fee. Here's the website. Go in here and fill it out. That 40 goes to about 7. And the rest of them are just, that's the first screen right there. And then from there, you know, it pulls criminal history, it pulls credit, it pulls eviction history, and something else. I can't remember what the other thing is. But I look the hardest at the credit, but I don't necessarily look at the score per se, because a lot of times renters are not going to necessarily have a high score, but I look at what specifically are the problems on it, right? Yeah, how far back they are. Are they old collections that were medical collections from 8 years ago, and that's what's dragging their score down? I'll pursue that, right? I'll talk to them a little more. If it's like they've got a cell phone bill and a water bill and all these other bills that are in collections and it's current, no way, absolutely not. So that's kind of my approach to that. All right, let's do this one. So kind of another variation on the other question. How do you know when it's a good time to buy? Like just in general, not necessarily that property, maybe it's that property, but how do you know when it's a good time to buy? And how do you know when it's a good time to sell? Like, how do you time the market?
You don't.
Yeah. Agreed.
You can't really time it. I go to Redfin, and I just learned this like 4 or 5 years ago. So y'all need to learn this now. It makes it so much easier. Save yourself 20 years. I look on Redfin, I look at the days on the market. So I buy in different areas, and different areas are different pockets, you know, so Alabama sells different than Tennessee. So I will look at days on the market, how many listings are in the area, and how many closings are in the area. And I do that year over year. So I can see kind of how the market's trending. But the one thing that has helped me the most is I go back to Michigan has a consumer sentiment report. I believe it comes out monthly. I believe that's right. And I look at that because that way you see the trend of how everyone is thinking. And that is how everyone is thinking about buying a house, a car, getting a loan for their phone. I mean, whatever it is, you get to kind of see how the direction of people are going. And if that is starting to trail up over a couple months, and so is the real estate market starting to turn, that's usually a pretty okay time. That doesn't mean to take what I'm saying and go do it tomorrow. Call me and we'll walk through the deal maybe. That's probably a better idea. But those are the little things I've finally started looking at that have helped me probably the most.
Yeah. So I don't invest in real estate for short-term gains. Okay. For me, it's all long-term. I'm thinking 20 years down the road, right? the cool thing about thinking that way is I don't really care I'm not trying to time the market. I have time on my side. So if I accept that real estate is going to continue to go up in value, I can, like I said, you heard me earlier, I'm struggling right now, guys, like, cause these numbers just still, they seem wacky, but I'm almost there. I'm like Brian and Renton, like I'm getting there. So what I'm looking at now is, okay, yeah, I'm not getting my cap rates like I used to, but is this going to be an asset that is going to be worth more in 10, 15, 20 years? Rule number one, am I going to lose any sleep over this thing? And what I mean by that is financial stress, dealing with renters. I've got that covered, right? So if I'm not going to be financially stressed over this because I know the bank's going to give me the money and the numbers are going to be tight in the beginning, but over time it's going to work out, then I would say buy. And that's what I'm struggling with right now is I'm having this internal conversation all the time about you've got time on your side, use it to your advantage. But I hate anything that just loses money on paper. and that's where I'm still struggling. The fortunate thing I have is I have really good cash flow on other properties. So I could buy a loser right now and be totally fine because the other ones are going to pay for it. But I'm just struggling with, I'm not there yet.
Well, you certainly don't want to do that.
Right.
Right. Yeah.
Jonathan,
all
can
right.
I ask a question of the three of you guys? The last year has changed the market, last couple of years especially, but rate-wise, the last year has changed, right? Doubled rates, prices still escalating. So that squeezes the investor market. So you talking about being almost at that point. Is it a rate issue for you? Is it a price issue for you? Is it both? I mean, because
It's cash flow.
Well, but that's shrinking almost daily, it seems, with the Fed continuing to raise rates and the lack of supply and demand that we have here, which is continuing to increase prices.
It's a little bit of both. I mean, I need, and I say I think most people invest in, something needs to give one way or the other. Sure. And that's all. We're just looking for a little bit of give. I like to buy with HELOCs, and that's a whole nother class. And because the way you can pay off a HELOC versus an amortization, but I'll take an amortization if I can get a good rate because I know that's fixed, right? Right now, I'm just not, I can't get a fixed for what it's worth doing, and I can't get enough rent income for what it costs to buy the
That's
property.
what's holding you back right now?
Yeah, give me one or the other.
Yeah.
Which I don't think prices are going to go down. So I think we're all sitting around waiting for interest rates to come back down a little bit.
Are you a HELOC in the first? Just curious.
Yes.
Okay.
Yeah.
All right. So we're gonna move ahead a little bit. I've got two more, one more big question, and then we'll have two more little questions that'll go into their questions. Everybody follow that? Yeah, me neither. Okay. So big question is this, and this will be everybody participating. How do you start? Where do you get the money, right? Where does the first one come from? Because it is my opinion, that's the hardest one. And so how do you start? I'll sit down for this one. Oh, no.
Rich family members, partners, investors. I mean, that's a great question. And that's probably the first hurdle that a lot of people have to overcome. The bank will only lend you so much. The mortgage company will only lend you so much against the purchase of that home. And so getting that initial down payment, it's not the 3% like you're buying a personal residence, it's 20%. And so that's can be a game changer. Now you can leverage existing properties. If you own a home And this is what we see most of in my world from the commercial banking side. People will come in and they'll say, we want to tap into the equity in our home, especially in this market. They've gained a lot of equity over the last couple of years. So they either do a cash out refinance where they've then got the cash to come to the table for this other property, or they're doing a home equity type purchase or home equity on their personal residence that allows them money to tap into if they find that property they want to buy. But it's tough. Once you get that, you're right. The first one is the hardest one, because then you get to a point where you've got equity built in either your personal residence or your first or second property that you can then leverage into the third. And then over time, you gain that more of that equity to leverage into the next one. And then it just kind of builds from there.
So I got started late in real estate. At least I say late. It's these wish I'd have known now what I knew then. Is that the Toby Keith song? We can, yeah. Should have been a cowboy. So here's what I stumbled into this. Okay, here's how it started. So in 2010. We bought our house that we live in now on a short sale, $53 a square foot on a $3,600 square foot house. Have a lot of equity in this house. Okay. The next thing, didn't know anything about equity at this point. Okay. We just bought the house because we knew it was something we could grow into as a family. We didn't have kids at this time. We knew it was a good opportunity. Okay. 2013, we went in with my in-laws, half and half, and bought a property in Gulf Shores. Okay. Plan was to keep it, short-term rent it, long, vacate, no big deal. HOA changed the rules. They made us sell it. Okay. We had to, because we couldn't rent it anymore less than a month, which didn't make sense for us. Right. The sale forced us to gain about $50,000. Okay. Not a bad thing, right? What do we do with $50,000? Right.
Your taxes on it.
After taxes, right. Which again, didn't really know what 1031s were at this point. Probably wouldn't have done it. In hindsight, probably would have, but that's okay. So we have this gain. Then I realize oh my gosh, this house that we live in has a lot of value to it. Then I learned about first position HELOCs. All of a sudden, we have lots of capital that we can tap into to start buying property, and that's how we did it. So, honestly, nothing smart about that. Just hit it at the right time. That's all. That was just, buying in 2010, 2013, everybody looks like a genius. I mean, come on. Like it's not hard.
So mine is more of, I was about to get married and I was talking to my wife and she said, I don't want millions of dollars in debt. And so I said, I wanted to be in real estate. And she said, okay, just don't go into debt. And I sat in my Firebird for a very long time. And she got out and I cried. No. So what actually happened is at that point, she really, most of that, except for the crying, is true. She did say, well, I may have cried. So what? Everybody loses a dream. It's okay. But she did say she didn't want to go into debt. So I went and studied and figured out and found actually a mentor. I found a guy that would help me and teach me. He has since passed away. And I'll be honest with you, I owe him millions. But he taught me how to do what I do now. He was the one that taught me how to do sub 2. And I still, I have a HELOC in the first position just in case I need to pick up something next week. But that was my biggest thing. I would say after that, so when it comes to getting money, it's not as hard now because I've done this for a few years, and more people, the more you help, people get solid returns, the more they tell their friends, and they always refer somebody with more money than they have. People always refer up. If I was getting started, this is exactly how I would start. Feel free to write this down. So let's say it's wow, cool. So let's say it's a $250,000 house and you're given $100,000 for it, and he's really writing, and it needs 50 in work, right? So that's 150. I would find some businessmen, some people that run businesses, some people that are in, financially solid places. I would go up to them and go, hey, I have a question. Most of the time, people in this world will help you. And I would go, hey, could you tell me if this is a good deal? And you go and run through the numbers. It's worth $250. We're buying it for $100. I'm gonna need to put about $50 into it. Does that sound like a good deal? And 95% of the time, they're gonna say yes. And then your last thing, right before you get up and you walk off and you go, hey, thank you very much. I really appreciate it. That was really helpful. Is you go, if you have any friends that would ever be interested in that, could you tell them to give me a call? Because I'm trying to figure out how to get this done. And half of those people you talk to will either refer somebody to you or have the money and do it. They'll jump because the money is in the deal. So if you have a good enough deal, there's people will fund it.
And I would add to that if this is something you're thinking about doing at some point, then going to things like this, going to places where you can meet the people that would have the knowledge and ability to do that. So whether it's real estate investors in Nashville, whether it's any kind of opportunity that you have to sit and listen and talk to folks that are actually doing that kind of business, make the connections, make the relationships ahead of time. One of the questions, and I actually emailed this out in my weekly email last week, how much credit do you give luck, right? So the story you told, right? 2010, 2013, it was easy. Now we look like geniuses. Some would say, oh, well, you were lucky to have been in that position in 2010 or 2013. And maybe there's some truth to that, right? But I'd say that if you're going to be successful in this, I think you need to adopt the mindset that you create probably 85% of your luck by positioning yourself with people and around people that at some point, 1 year, 5 years, 20 years away from now, can help you in those scenarios. Any argument, conversation on that? It's a good thing. Of course, Brian.
I don't believe in luck. So I don't look at it. I 100% agree with you. It's like at the REN meeting, I went and talked to a guy in the back of the room that nobody was talking to. So I figured, I really went back there going, this poor guy's lonely. Hi, how you doing? I'm Brian. He had 400 plus houses. He wasn't lonely. He just knew what he was doing and just sat back there and listened. And so it's intentionally going out and it's changing that mindset. There are people out there that will help you. You just have to learn to run into them.
That's good.
If you're the smartest person in the room, you're in the wrong room.
You're in the wrong room. Yeah. So I got started by just not selling a house. So in my scenario, looking to upsize the house, we just didn't sell the other house and just kept it and figured out a way to save up to do another loan on the next one. Took a HELOC, I think, maybe, I don't remember, a small HELOC, and purchased the second house and kept the first one. So I think a lot of folks get started that way. I know a lot of folks got started in 2010 that way because they couldn't sell. They were upside down in that first house. So they had to keep it if they were going to upsize house. Yeah. But thankfully their income was such, or their savings was such, that they could make that work. So I'd love to, when we open it up here in just a sec, would love to hear those of you that have done some investing. How did you get started? Last thing, and this is going to transition into everybody asking questions. What are some, give me like your top 2-3 hacks, tips, tricks, that kind of thing. And I'll tell you mine, and then resources that are out there that you should tap into. Some have already been shared, some specific resources. I know you were sharing some. So one of the tips that I've, kind of a group of them that I learned from a mentor, same concept. He only bought houses. quote unquote starter houses. That was his niche, right? 3-bedroom, 2-bath, 1 or 2 car garage in an established neighborhood in Laverne, Smyrna, Murfreesboro. That's what he bought. And he had a boatload of them. And his thought on that was, no matter what the economy is doing, I can rent that house. And no matter what the economy is doing, I can sell that house, right? Like that is the easiest properties to buy, sell, or rent. So that was his thing. The other thing that he did, and I did this for a long time, and I have not done this in a while. He always collected the rent at the house. He never got it mailed. So once a month he went to the houses, collected the rent so he could see if there was a car on blocks. He also, this is all he did, was he was his own property manager, and that was his job, right? He had enough houses that was his income. Is he changed the air filters around the middle of each month as a service to his tenants, because then he could go into the house and inspect that house. And he also knew that the air filters were getting changed. So that was great. So if he didn't allow smoking, he knew immediately if somebody was smoking. Or dog. Yep. Or worse, a cat.
So kind of in the same vein, if I'm looking at something that I'm going to rehab, or I'm looking to wholesale, so I buy it at a wholesale price and take it straight to retail, I am looking for something that is below market. So below the average sales price. So if the average sales price is $300,000, I'm probably looking at something in the $250,000 and lower range. I got a buddy that rehabs in another city where we just rehabbed and finished something as well. And I'm selling mine at $250,000 and he's selling his at $400,000. And I have had plenty of foot traffic. I've had a couple offers. I didn't like them, but he hasn't had anything. The average sales price in that market, I believe, is $370,000 or $380,000. So he's just a hair above. It's just a hair above the average. But my house is affordable to everybody. So my market, it's kind of like when I own or finance a house, my market is massive. Like there are 25-30% of the population that qualifies for a loan. I don't even know. It used to be about 25, something like that. So when I'm owner financing, I'm selling to 70% of the population. I can sell a property pretty quick. So when I'm looking at doing it to either rehab or retail, I'm looking below market. If I'm looking to something that I'm going to own or finance, I can look at any market. You could look at $1 million home, and there's somebody out there that owns their own business that makes bukus of money, has plenty of money for a down payment, but the bank won't touch them. Why? Because it shows they make $200,000 on their taxes. They write everything off. So that's what I always, if I'm looking to buy or sell in the, like to make it the 101 version, I always look at something that's below market so I have options to move. It only took 20 years for me to learn that.
I don't have any tips. I would just say,
Get a property.
yeah, that I haven't already told you. Big stuff though, be curious. You know, like read books. Like seriously, like
Read a book.
yeah, like there's some really, you know, be curious, try to learn, believe in, you know, kind of be like Warren Buffett, believe that the future is going to be better than the present, and then do something. You know, have you ever met anyone that's like, man, I wish I would have sold that property? What do they all say? I wish I would have kept it, right? You never hear anybody say that. Maybe Brian, but
They did in 2010.
Yeah, there was a point.
well, but guess what happened?
Yeah.
If they'd have just sat on it, right? So, you know, my thing is I'm just always like, you know, I go back to, am I going to lose sleep over it or not kind of thing. And I have time on my side, and real estate is supposed to move slow. What's happened the last 2 years is stupid. Okay. And I would caution you, and this is one reason I've been a little cautious. if you historically, you say, you know, I see these charts all the time. Well, it always goes up, even during recession. Look at, when have we had a 50% appreciation of real estate in 2 years, though? We haven't, have we, ever? So we're in historical times. I'm not saying there's going to be a big dip, but that it could just be a weird, freaky outlier. But if you're going to be a little cautious, now's not a bad time to be. But again, if you're holding on to it for 15 years, buy it. It's not going to matter. Yeah.
I don't know if it's a tip or trick, but I would say leverage your agents. I mean, you guys are going to have access to information that me as a new buyer won't have, right? Websites, I don't know, whatever publications, you know, insight, you can pull reports, market reports, you can drill down as close as you want, right as you want. Find people who have access to information that you don't. And I think that's going to be a big piece. And that's, again, that's what you guys do. That's why people engage you, right, is to help them. So I would say definitely point you in that direction.
Awesome. All right, floor's open. Who's got a question for these guys?
So we recently got engaged. We're blessed to own both of our homes. I recently purchased mine last year, about June, right when rates started to go up. And so we were looking at possibly renting it to townhome in Antioch. We've been looking at comparable rentals in the area, and it is equal to what the mortgage is. And so my question kind of stems from is, how do you convert like a residence into an investment property? And then looking at the situations where a mortgage is equal to what you would probably go for rent in the area, how do you address that? Do you take the keep it and just to keep the property and just don't make profit, or do you try to shoot the profit and let it sit empty until you can rent it?
Don't let it sit empty.
Oh, no.
Yeah. Because even if all you do is break even, that's better than losing, right? So, and insurance and property deteriorates and. So don't let it sit empty for sure.
Well, I would, and this is just what I do. Are you looking, so a lot comes down to what your end goal. Is this something you do want to keep over the long run? Is this kind of like, I would like to get rid of it? Or do you know yet? Have you really, so when I'm running through my call script, the thing I want to know is two things: property value, roughly in condition, and what's your motivation? So if it's something you're looking to hold over the long run and you can afford it, I would probably just break even. It's going to, in the long run, cost you a little bit because of basically when a tenant moves out, you're going to have to put $3,500 in it. I don't even know what it is, and it doesn't matter, just $3,500. Yeah, just like the dog stuff. But if it were me, I would take it and owner finance it. So, but I wouldn't get into that as your first deal. That is a lot of moving parts. But yeah, I'd just take what I could get on the rent, and you know, it's your end goal. Where are you going with it?
Yeah, I bought it with the idea of eventually turning it into an investment property. And so that was the goal. And then we met, blessed that she had her situation set ready to go. And so we've talked about that, and as we're planning on getting married, combining assets and things like that. So, hey, well, what do we do now versus what do we want to do long term? And trying to just, because right now it's just sitting empty with some of my furniture. And it's been that way for 3 months. And it's like, hey, this is not a cheap storage room.
Yeah.
So let's do something with it sooner rather than later. Do we sell it? And right now, I think I'm about 7,000 upside down compared to when I purchased and where market is now. So do we sell it, take the loss, or do we go ahead and go for the investment? We start looking at comparable rents in the area, and it's pretty much dead even with the mortgage. So,
Dead even with the mortgage. Does that include your escrow too?
escrow as well as HOA.
So you wouldn't necessarily make money,
Right.
but you wouldn't lose money. If it was me, I'd rent it, because you have to remember you get appreciation over time, right? So you're not cash flowing, but and tax benefits, you are making money without spending any money. You see the beauty of that? I can't think of any, this is,
And
talk,
it's-
why
and
do you
it's
invest
sitting
in real
empty.
estate? that's why.
Sitting next to that too.
Right.
yeah.
So I can't think of anything else in the world where I have no money and it actually makes me money.
And you are making money, even if all you're doing is paying your mortgage, you're making money because you're gaining that equity that you're paying, right? You're just not putting extra money in your pocket. Now, I would say this, figure out a way, and not going to be for your rents, do something to set aside something, because there is going to be something that happens. Right. Something, anything, right? HVAC is going to go out. A squirrel's going to crawl into the I mean, who knows, man? Crazy stuff happens.
Fall in the toilet. What do you want to, I had a donkey in the backyard. I've had everything.
A donkey.
I need to hear that story.
This isn't like, wasn't a farm.
Interesting. All right, who's next? We had like 500 questions at the last one. Come on, y'all.
They're so educated.
Yeah, I know. You should have lots of questions. Kale, come up here.
So this is more of a cautionary tale, and I think it plays into the question that you all asked. So we had, sorry. All right, so we had a home in Laverne in 2014 that we ended up selling, and we were so close to renting it out and keeping it. We even had the for rent sign printed up. We had the books. We had everything. And I think looking back, we would probably wish that we had probably held on to that property, because obviously we see where we are now. But it's not something we've lost sleep over, but, you know, something to think about.
Missed opportunity.
But if you hadn't sold it, you never would have met me. Yeah. That's right. That's right. I remember that story. All right. Anybody else got a question? Got a specific circumstance?
Can you talk about the benefits of putting multiple properties under an LLC as opposed to not?
Yeah, I can talk about that. So I'll just use myself as an example. I don't have an LLC, okay? And I do LLCs all the time. I have people weekly that come to me and say, I want to set up an LLC. I bought an investment property. My thing is, if it was a short-term rental, I would say, please, yes, do that. There's a whole different set of liability with a short-term rental than a long-term rental. I just love umbrella policies, okay? I would rather just have lots of umbrella coverage and pay that premium than register with the state of Tennessee every year with my LLC. Okay, not to say I eventually won't set that up, but frankly, my liability is low. It's just low. I have to know something is like inherently dangerous on the property for them to have any sort of, can I always get sued? Of course. I can always get sued. But guess what? So can an LLC. Yeah. Okay? So again, that's why I like umbrella policies. And that's what I always advise my people. But otherwise, you know, there's no harm in them, in getting them. I think people get a little too, like, I got to do this. And I would say, you know.
I have an attorney question.
Yeah.
Kind of thing. So
I need to have my blurb
I'll
that's
raise
like,
my hand.
this is not a legal opinion, you
give
know.
legal
Yeah,
professional
that's
advice.
right.
Don't hand me a bill for about an hour.
Wait, I'm out then, my bad. No. So is there ever, if you were, this is not for me actually, this is like a good, for everybody to think. Yeah, for a friend. Of course. Thanks, friend. Is there ever a time you would use like a C Corp compared to a LLC when you're doing things like short-term rentals, long-term rentals, rehabs, anything like that, selling notes, anything like that?
My answer to that is I will do what my CPA tells me. Yeah. And I really, like, I don't do, so, you know, we're getting into tax stuff. The day my CPA tells me, hey, Tab, it's going to be to our advantage to set this up in a C Corp, I'm going to file an LLC that day, and I'm going to transfer everything into the LLC. But until that day comes, I'm not worried about it. The beauty of an LLC is you can set up an LLC, and it doesn't have to be designated as an S Corp or C Corp, any of that. You can do that later. So, but I'm I rely on, that's another tip. I've got a great CPA, a proactive CPA, one that looks at our portfolio every year and is thinking about ways that we can lessen our tax liability. And so that's another thing that I would encourage you to get if you don't have one. So I just, whatever he tells me.
Do y'all have a convention where y'all talk about this back and forth, and you're like, I would ask the attorney. I would ask the
Oh, yeah.
Yeah,
Always.
evidently y'all do
Yeah, yeah.
because they do that.
Always.
I'd also add that I think it's important. You talk about kind of the ask your CPA. You need to have your team. That's your banker, your CPA, your attorney, your insurance, and your real estate agent, right? If you think about it, especially if you're getting into the real estate investment, there's not something that's going to happen that's not going to touch probably multiple of those people at the same time. I can tell you on the commercial side, I deal mostly with LLCs. Typically when someone calls and says they want to buy a property, and Brian just left, I was going to ask him a question, but ask them, are you buying this in your personal name or in an LLC? And if they say, well, I don't know, what's the best option? I say, consult your attorney, consult your CPA. Right. Because the LLCs will flow through your personal tax return, so you'll be taxed at the personal level. There might be advantages to just doing it as a Schedule C in your own name and increasing your umbrella, your insurance policies. But LLCs are just that, it's limited liability. And we're in a litigious society. But to Tab's point, it's got to be something blatantly wrong and neglected as a landlord from that standpoint before it could even get to that point.
So what is so much different in a short-term rental that you would say absolutely short-term rental LLC?
It's just the threshold for getting sued is much lower. So in Tennessee, you are strictly liable on a short-term rental. That means it's furnished and you're not renting it. I mean, you could rent it month to month, but it's furnished is one thing they look for. Anything happens, their entry level is there. They're already there for opening up a suit. It's much higher in a long-term situation. So that's why I just tell people, if I had an STR, I would incorporate with that. Just because.
Would you only incorporate the short terms, or would you incorporate all of them
At that point, I would probably create a holding company and then do a series LLC. Yeah. But that's another class.
Structure.
What I have, I do have, so all of my properties are in a trust because I do estate planning. I love trusts, again, a different class, but there's tax advantages to that. And there's also, from an estate planning standpoint, they're wonderful. They're just, I have 2 8-year-olds, and if something were to happen to my wife and I, it'd be a total nightmare for 2 8-year-olds to inherit a bunch of real estate, right? So we have a trust set up that deals with all that, and so I'm a believer in entities owning real estate. I just think sometimes we jump the gun a little bit on the LLCs.
Nick?
Since this is a 101 class, we're talking about taxes. Maybe we should go over like a long-term capital gain versus a short-term capital gain. Let everybody know like some of the best things I've done over my investing career is waiting for that long-term capital gain so I can pay just a little bit of tax on that money.
Yeah, so if you're watching on the stream, Nick's question, just a real basic overview, long-term capital gain versus short-term capital gain. The benefit of waiting just a little bit.
Right.
I don't know.
I don't know the numbers,
Yeah.
but yeah.
Consult
So-
your CPA.
Easy, doesn't it, from a bunch of guys?
Yeah.
But
So,
But again, I don't short, like I don't even think about selling
Nick,
something short.
long-term is 1 year, right? And it's 40% in that year.
So a long-term capital gain, instead of, if you're at the top of the food chain, right, and you're taxed at 40%, short-term capital gain, meaning an asset that you sold that you only held for less than 1 year, you'd be taxed at that 40%.
Right.
A long-term capital gain, if you're at 40%, is maxed out at 20%, you don't pay 20% on that gain. It can be much lower than that.
Depending on what your tax bracket is. Right. But short term is always at 40, correct?
Well, it's wherever your tax, yeah, what you're
Your
paying.
bracket.
If you're in the 25% tax bracket, it's taxed at 25%.
See, I didn't know either. I just knew that long-term was
did know
better and
that.
you only got to hold it for 1 year. So,
I just want to, like,
No, that's a good point.
taxes really are very, very important. So having
Yeah.
your team in place is key.
Yeah.
You'll lose more money in taxes than sometimes you.
So in a,
In this case, with primary residence, it's gonna be to the advantage of the lot as well, right?
Yeah, but isn't, you have to ask the banker, I mean, is it frowned upon to have a primary residence?
Yeah, so Jason brought that up to me.
Yeah.
Disclaimer,
The legality.
doing what we just told you to do,
There's an asterisk
Yeah.
by that.
there is most likely in your deed of trust and note a due on payment clause for
A
that.
clause.
So here's the reality.
THTA checks.
Yeah.
They're about the only
Yeah.
ones.
Well, and so
Yeah.
here's the.
It is a
we
THTA
were
loan?
kinda-
No, I don't think so.
we were talking about that, and I do think the reality of it, I mean, the legality of it is, if you transfer ownership, if it becomes something other than your primary residence, it could be due on demand. They would have to find that, though. So here's what I mean by that. It costs banks, mortgage companies, a lot of money to go through and do title searches, right? They'd have to they would have to dig a lot and put in their own money to do that.
And ultimately knock on the door.
Well, and find out that that you're not there.
Yeah,
I
especially
mean,
in that situation.
they'd have to find out, and it would be really hard and it would be really costly. And most of these mortgage companies deal in such volume, they're not going to do that. Now, can they? They absolutely can. They could show up or reach out to you and say, hey, this is not your primary residence. But the good thing is your ownership is in your name only, right? So there's a little bit of different as opposed to if it was jointly held and then another one bought jointly held and another one bought jointly held. So there is some risk.
And there's also not a penalty.
No.
Okay, it just means, hey, we want our money. We want everything that you owe us. So you refinance or you sell.
Yeah.
So I'm not an insurance guy, but I'm also insurance on that.
Yeah, yeah,
For a renter,
yeah,
so you may want to check.
yeah. You definitely right. Yeah, you definitely want to do that.
so I'm not saying I would take something with that subject too on there, but I'm not suggesting you do this, but deeds change hands all day. Like divorces, people die, and there are quick claims.
Sure.
Make sure everybody knows that's quit because I've heard it said quick so much it drives me crazy. But they transfer that deed. That happens all the time, and most of the time banks know this goes on. I have talked to more than one bank because of what I do, and I've even told them what it was. And the question, I bet you 50 to 70% of the time I get is, "Are you going to make the payment?" I'm like, "Yes," and they go, "Okay." Well, do you have any other questions? That's really what happens. Now, THDA, or there's one in Georgia that was the same. I wouldn't do that one.
No, they check.
It's not an
VA
issue
gets
unless it's an
edgy, too.
issue.
Right.
Right.
So I actually sold a house because they got notice from THDA that said that, like, they go and they check, and their motivation is different because of the way that they acquire funds that they lend, and it's a whole other thing. But generally speaking, if you're paying the mortgage,
Yeah.
That's why
Yeah.
I have pretty chandeliers.
where it does come into play a little bit though is depending on what type of mortgage it is. If you then go to buy another property, right? Especially if you want to reuse that same type of property or same type of mortgage. So like VA, for example, you can only have so many in some of those. Yeah.
Good.
It is. Other questions? What?
Oh, Trent's ready to go.
I have no idea what Trent. I love Trent Denson, y'all. Yeah. National championship.
It's tonight.
Oh, jeez. All right. Yeah, I guess there's a basketball game. It's important. So anyway, I was like, what is he even talking about?
You have all these TVs.
If you put it above us, people will be like, oh, this is great.
No, then yeah. So anyway, all right. So July 3rd, we're having 201. We'll get much more in depth on some of these specific items, some of the taxes and all that kind of stuff. Nick, I will make sure that I have exactly what that structure looks like. I just did that, so I don't know why I didn't remember that. But anyway, bless my heart. Also, you can cut the feed if you want. Yeah. Hey, thank you for watching. Have a great rest of the night.
Over there just laughing.
And we're awkward. Okay. Everybody, it's in here.